What's going on, traders? I'm Antoine Farrell back with another trading video with Digital Goats Academy. Today is our market forecast. So welcome. Market forecast is pretty much where we go over our predictions or analysis on what we believe is happening in the market this week. So without further ado, let me go ahead and get straight into the chart reading. If you're tuning into this channel, guys, do me a solid and hit that subscribe button as well. Like and comment on anything you guys want to see. Any questions you have, or overall just conversation. But yeah, if you've been following our channel, I always say this, that we primarily focus on what we believe is the money makers, which is indices. We do a little bit of commodities, but if you already are watching our channel, you know that we do foreign exchange trading. So I really don't have to go into further depth with that. But this is US 30, what I have right before me. So US 30 has, to me, been ranging between basically this high and this low over here, which I mentioned that we were probably still in a consolidation phase with US 30. It has yet to break out any true direction, but we can see that today, well, within this week, we did target that 945 candle that I mentioned. So I did push this out on weekly review. So Sunday's weekly review, I pushed it out where I said, hey, I believe that this is our buy zone. And I still do believe that this is our buy zone. As you can see, price has been kind of pushing by, well, bringing in, a bull run within this general area. I said anywhere from 49,150 to, I think I said 48,850. We didn't want to see it go any lower than this area. So again, we're using chart patterns to basically read the market. We're using candlestick patterns and trend patterns. I didn't mean to say chart patterns, but candlestick patterns and trend patterns. So right here is a candlestick pattern. We've been seeing these patterns present themselves over and over. Now, make no mistake, identifying a pattern doesn't guarantee that price is going in said direction, but you can still utilize that pattern if price decides to violate it. If price were to break this morning star pattern, which everybody should know this is a morning star pattern. If you trade some form of indices, whether it's S&P, NASDAQ, they present themselves all over those currency pairs. Bullish flag patterns, bearish flag patterns, those are probably like the common candlestick patterns that you're seeing, but let me go ahead and zoom in on this so we can see. So I was actually just going over this with my community last night, but what we need to see, and I think we talked about this on weekly review. But anyway, what we need to see is a bear candle, some form of a doji. It can be bullish or bearish, and we do need to see a buy candle on the opposite side. This pretty much determines that price is creating a morning star pattern. Now, within that morning star pattern, we do need some type of pullback, and this was the pullback off of this pattern, but if we go out to a higher time frame, we probably see, let me see. I wanted to see if we see a difference in how the visuals look. No. So this was the pullback in order to test basically this entire pattern that pushed us up. And then as you can see, the market built resistance somewhere up here. And then we've pretty much been testing this overall area since today. Now, even outside of, if you don't use like chart patterns, I mean, why do I keep saying chart pattern? Candlestick patterns, you can still use like basic market structure for your analysis to kind of see like, okay, what I identified yesterday was that after we broke up out of this area, I understood that consolidation was formed. A lot of times when we're seeing these push ups or push down in the market, consolidation is being formed. Now, I always say that because what do we know? Indices are attracted to consolidation. So we know that indices are normally going to try to target some form of consolidation, and it can test that area as many times as it wants before it makes a decision. So after the market basically did kind of this fake out number yesterday, I was kind of skeptical that, well, one, I had this marked up. I wasn't, we still need breaks of structure in order to confirm that, yes, price is continuously bullish. As we've been seeing, it's been building bearish pressure, like basically since I wouldn't count this, but this is resistance. I guess I would count this. May 7th. So we have a form of resistance around May 7th, which is around the 945 candle. That's where I have this green zone at. So you can see that within this area, price actually, pulled down. But we haven't broken out of any lows. We can say that, oh man, price has been bearish. But we can very well say the same thing that price has been bullish too from May 4th. And anytime we had an opportunity to buy, we could have taken it. Anytime you had an opportunity. Now, the sell does, outside of this area, the sell does look, a little bit more attractive. But overall, this movement is what? It's a sideways movement. We haven't really been trending up. So I say ranging because to me, ranging gives you opportunity. Now, there's a definition and a difference between ranging and consolidation, but I say range because in consolidation, you can't really, like, there was no money to be made in this form over here, but there was opportunity to be made in a range. And a range isn't necessarily saying that price is consolidating, even though in a sense it's consolidating when you go out to higher time frames because this information to be smaller, but there was opportunity to take trades within both directions. What we're focused on is the overall trend, right? That's why I'm not like entertaining the sell unless I get a break of true structure, which would have to be basically like below this area. Then I would have like cause for concern that, man, we may actually be pushing down back to these lower levels or ignoring the continuation of this inverted head and shoulder pattern, which is a bull pattern. You know what I'm saying? We're still playing to that. We have yet to come back to any of these lows that price pushed up from, especially when we're looking at these two lows right here. Price has not come back to this area, but I did say that this would probably be our buy zone. So the market closed like this, so we do have to wait and see how the market opens. If we get a gap down, I'm still looking at this as the support structure, like the green zone. But the lowest area that I believe that the market could travel would be the support structure. Anything lower would be a violation on what we thought to be buyers presenting themselves in the market. And the market is obviously coming lower to these areas that, we just weren't expecting. That could be it could be because of news. I don't want to say that news is necessarily the reason why price is like pushing down. Because as you can see, based off of structure, based off of technical analysis, we've been building resistance up here. So if I turn this to a red, if I turn this red, we can see that, yeah, price has been building resistance. So one thing I always discuss is that if prices react into these areas, like treat it as such. So each time we've been, pushing up to resistance, but each time we've been down here, we've been creating support. And what what I look at is like how price has been trending. We've been creating, even with these low points, we've been higher than the previous low point. So unless we violate, like I said, this low point or this low point, which is a big move down, make no mistake, if price sells, that's a big move down, but that presents an opportunity. By the time price gets here, I'll kind of know if we are selling off. But like I said, I don't believe that we're selling off. The only thing I think that we're doing right now is ranging in order to continue in this direction. Because even when you look at the structure, like based off of the lows or the dips or the valleys that have been made in the market, each time each of these lows have been higher than the last. Even the one that we formed yesterday. See? So remember the trend, trends are like made all over the market. So again, don't get comfortable with saying, oh man, the market's trending. You draw a trend line and then you're confused why the market violates. I've seen this a lot. That's why I don't commit myself to one like aligned level, understanding that what I'm trying to see, if the market does something a little bit different, that may not be like, it may not be violating my structure. It just may be, going to a lower position or a higher position than I expected. So that's why I said don't restrict yourself to just looking at a like creating a trend line and saying, oh man, price needs to bounce, or if it breaks it, then I'm no longer looking for the same bias. You know what I'm saying? I'm still looking for the same bias, even though based off of this trend line, price had broke it because I don't stick to levels. But I am seeing that trends are being made even in this position. So we are forming some type of trend, which looks a lot better than this overall trend right here. This is like damn near like a 75% angle. This is more of what we would like to see, which would be a 45-degree angle. You know what I'm saying? Most trends are made through like 45-degree angles. You know what I'm saying? Like when you're seeing the start of a trend. So this is the start of a new trend. This is a good sign right here. Excuse me. This is a good sign right here. But like I said, to me, this is still the buy zone. I'm not looking at sells until like I get a violation of this. So let's hope that price decides to turn around during Sydney and Tokyo, which we've been seeing a lot of that. We've been seeing a lot of indices start to rise during Sydney and Tokyo, and then maybe start to sell off by New York. But you know, really hard to call it because, like I said, you kind of can treat range in like consolidation as there's no directional bias. We just know that based off of structure. We have support down here. We have resistance up here. Let me turn this back. And we just wait for the break, which again, I'm still using technical analysis. So I ended up marking up this consolidation, which I overall didn't expect for price. I was hoping that price wasn't going to push back down to this level, but it did. That's why I say, you know, leave your markups or while you're in a live trade, still analyze the chart, still get information because if you're expecting like if you're expecting the market to continue in a certain direction, you want to know what's going on, but also you want to be able to say, man, I'm gonna go ahead and take profit and then, you know, give me an opportunity to re-enter. This is very common with like indices. They do this breakout and then come back and test this area again and then pop off. So that's what I'm looking at. I'm looking at this still to be the buy zone. And then there was obviously some form of manipulation that was well, I wouldn't say manipulation, but no, that was manipulation because the fact that price created, we know that price should try to bring us down when we're looking at open and bell. Open and bell did bring us down, but as you can see, we got stuck pretty much up here within this level of resistance. So here's where price got stuck. It built some form of resistance and pushed us all the way back down to where we dropped down for opening bell. Now, when it did that, if you look on the higher time frame, you can see that that was a wick. Let me move this out the way. You can see that that candle was a wick. So we normally expect price to do what? Try to fill the wick to some degree. And as you can see, it tested this area once and then said, man, I wanted to come down and get I wanted to target lower liquidity. This is still within the expectations of us looking at previous highs in the market. So because the structure, when you look at the structure based off of a line chart, all this information doesn't exist, like price pushing down to this area because it was based off of wicks. This is like the true structure. So if we get a turnaround right here, this is basically acting as what open and bell did this morning, where it pushed down and then rose up. And this would be the confirmation we need through structure that price is actually trying to buy back up. So like I said, I'm still looking at this to be the buy zone. I know US 30 has definitely been throwing like conflicting views on what its bias is, but you know, a lot of these bank analysts, they're still bullish in the market. And not that I rely on what their perspectives are alone or what they think is going to happen in the market alone. But again, you know, these people know a little bit more than us as retail traders. So I'm expecting price to rally off of this position. Whether we push down a little bit lower to create some equal support or we test this high, which I'm hoping that, you know, we just turn around from this high because we've already touched it during open and bell today. So like I said, I still think that price is accumulating orders um, to build up enough momentum for a rally. And then to me, once we get this break, once we touch 50K again, like I'm not thinking that we're gonna push down again. There could be a slight pullback just to make, you know, everybody like a little bit unnerved. But after that, I think that price is gonna continue pushing up. and we're gonna have the bull run we've been looking for. Remember, S&P and Nasdaq have been breaking their highs. You know what I'm saying? So US 30 to me is just playing catch up. It's just the kid that's been left behind, but it kind of makes sense because US 30 just going straight on a bull run. Um, I think that'd be a catastrophe for the market. So I'm kind of glad it's chosen to actually, kind of calm down and be in preparation for what we're expecting. It's building the momentum that we need in order for price to actually, shoot up out here. And once it does, I feel like there's no return until next year. Next year we may get an opportunity back. I doubt that because we've already hit that 45, 45K area. We may return here in like the next 2 years if price decides to push down from whatever resistance it's going to make. But like I said, I'm still like, I'm not changing my bias. I know that it's probably been tough because of what the market has been creating. Even right now, it looks like a bear run right now, but we haven't broken anything. So, one thing that I messed up in the beginning stages as a trader is one, not waiting for closes of candles, but also not waiting for market structure to truly form. We know in the smaller time frames, the market will push down and push up and, give like just like we saw today, just like with opening bell, you know what I'm saying? It pushed down and it did it so fast that it's like, man, this might be the rally. And then price said, nah, I just wanted to build enough momentum to do another sweep. And then I think it'll probably do its final sweep and push the market back up. So not much to talk about because nothing really happened. I mean, there was opportunities to make money, but nothing really happened. So within this period alone, it's been unless you caught this move, which was a pretty good move off of Monday. Yeah, off of Monday. Monday was a pretty good move. Man, that makes sense. Don't we always see Sunday to two? We always see some form of Tuesday testing. We've been seeing that over and over where Tuesday will come back and test Sunday. So let's definitely make sure we pay attention to that. But this wasn't an opportunity for like clear directional bias. So, there was probably a lot of traders just within these moves that got trapped, you know what I'm saying? Or you're still waiting for your trade to play out. Hopefully you chose lows to buy, and if you were selling, hopefully you chose highs to sell at. You know what I'm saying? But I'm still thinking that we're accumulating orders and price is gonna rally from here. So it's just like how this non-45 candle, because again, you don't have to use this, but again, this is something we use at Digital Goatz Academy, where and we've seen this before within any version of like the non-45 candle, as long as it's been like trending in a sense. So we can see that where did we identify this joint at? Oops, hold on. Do I not have man, I don't even know where the gap was for that. Hold on, now I gotta go back because I messed myself up. Because I don't have it labeled, so I don't know where. Oh, okay. No. Okay, there we go. My bad. I was doing the 945 candle, but I didn't know like I have to put it I didn't have it labeled, so I forgot where the 15-minute candle was. But anyway, resistance up here. You can see that we push down if we clear all the noise out, and I know there's a lot going on in my chart, so bear with me. We can see that price basically created these dips right here, did it twice, came up came up with like a shallow pullback. But this is the second time we've seen price come back to this 945 candle. This was the second time. And as you can see, price is doing almost similar to what we see up here. So again, I'm playing off of the overall trend. And I think that we've created support here. I mean, I know that we created support here, but I think that we've created support in the same way price created resistance, like acting like it's creating a lower high, but we're really doing a higher low. You know what I'm saying? Like because this is where the market closed at. So if you understand, that makes sense. If you don't, you'll obviously see when price decides to do its breakout, but we are expecting that price is gonna break out to the upside, and it's just accumulating enough one, hitting enough stop losses, but accumulating enough orders in order to push up. You know what I'm saying? The market overall, a lot of investors are still optimistic about the market. The only difference is that oil's been up, so that's obviously been a deterrent, as well as what happened today. It was oil and oh, the 10-year yield. The 10-year yield was up as well. So the 10-year yield has been on a bullish tear, which is kind of crazy to me. So we may be hitting that 5% number. Now, the reason why that matters, even if you don't pay attention to the 10-year yield, which I can actually go to it real quick, educational purposes. As you can see, we went on a major bull run. Um, May 6th. We've been on a major bull run since May 6th. Now, the thing about the 10-year yield is that it's been positioning itself up back at its resistance level. So if we just on this. Now, anytime the 10-year yield is going up, you should expect, because that's the bond market, you should expect the stock market to decline. So that's why we've been seeing all these red days within the stock market, because the 10-year yield, one, is it's been ranging as well, but also pushing itself back up to these resistance levels. Remember, when price meets resistance, what should we expect unless we get a break? You know what I'm saying? Like, price has been up here, but I think this is like a stronger version of like resistance instead of like the support building, where price will probably end up pushing down to these levels. I know within the Federal Reserve, they've been trying to get the 10-year yield to target 2%. I don't know if we'll ever see that, but I do think that we'll at least push back close to like 3% before we see like another rally. This should still, like, a move that pushes this down should push the stock market up and still have it like creating highs. So it's not like, oh man, when this thing start rising again, the stock market is going to tank like extremely lower than where it currently is at. Like, nah, it'll end up creating a high and then using that momentum in order to bring the market back down for the stock market so it can correct itself. Pretty simple, right? You know what I'm saying? But we're back at, and you can see like it's been building these highs. Each of these highs have been lower than the last. The only thing that's been inconsistent is like the support, how the support has been managing. But every time we've been up here, we've had like strong pushes to the downside. So because I am looking at US 30 and like indices to be at their buy zones, hopefully we'll see the bond market tomorrow start to tank or do some major gap down. I hope we see some major gap down. So next is S&P. Now, S&P, I'm still bullish. Remember, we said that we wanted to see, I know there's a lot going on here. We were doing some training last night. My bad. So I am surprised that we did come back to this high, which is support now. I said that this high was broken and support. Now, I did mention this specific candle. I was always kind of worried about this candle as far as price possibly pushing down lower to do a liquidity sweep, just because how this candle is formed. And I think I talked about that already. But we've been playing true to the support structure, but also of what a morning star pattern should be. We did have small opportunities within S&P. Let me see how much the pip count is, because I kind of base things off of a 0.01. So that would have been like $79, $80. That wasn't a bad move for like a buy. The sell has been a nightmare. Even today, that wasn't a bad move, $50 move. Yeah, this was a bad move. You would have got stuck. So when we were looking at the morning star pattern within S&P on the hour time frame, we said that price should come back and test this like a certain percentage. And it did do that initially. Initially, this was our 50%, and each time price hit this area, we actually had an opportunity to buy up. But we know if the market hasn't broken high by the next New York session, if we're still bullish, we should expect the market to open and bell to do it, bring us down. So we got brought down, which was that today? Was that right here? Yeah, opening bell brought us down today. push this up. And to me, this just looks like the test of opening bell today. So this kind of makes sense. It doesn't make sense to me that I didn't think that we were going to go any lower, but I did say these are the two options we can have because you got to give yourself like one room for error, but options on what happens. Because if you allow yourself to be restricted to one ideology of thinking when you're trading, you're not going to see when the direction changes because you're like, oh man, or well, not that you're not going to see when the direction change. You're going to change your bias instead of saying, man, basically I entered too early and price is creating structure at this low point. Now, yeah, price starts violating things like, or your your drawdown gets kind of crazy. Obviously, you'll have to pull the plug on that, but give yourself, like I said, options on what you expect may happen based off of what the confirmations are. I'm not making up stuff. I'm basing it off of the conditions on what I know a morning star pattern should do, evening star pattern should do, a bearish flag pattern, so forth and so forth, right? So we still have this area where price has been creating support, but it's also still been higher. Price did not shoot down and break this area today, which was a good sign. But I did wonder if we were going to come back and test this gap. The thing about these gaps is that they can be tested fully, like halfway in, or like the high. I want to believe that this is the test for the gap. For this gap over here, which was May 7th, again, May 7th. So I want to believe that this is the test for the high of this gap because this is probably the lowest we've pushed down besides where the market is at like currently. You know what I'm saying? Like after we made this bull run up here. So this is the lowest we've been. And the reason why I said the lowest is because looking at, with these wicks, even though the structure is up here, the wicks pushed us down here. So we at least targeted this support structure. But when you look at the overall structure, we've closed, hell, basically at the high of this area. So again, according to market structure, when you turn it to a line chart, you can treat this as support, which I would treat this as support. So and then unless price, pushes down lower, like what we were anticipating, maybe to target this, I would suspect that right here, we're testing the high of this area. On it to a line chart. Wow, it is. You know what I'm saying? Like, I mean, I kind of already knew that but I just drew that line because that's where the structure closed at. But as you can see, this is the high of what? A morning star pattern. That's fucking crazy. And we're slightly building support. So even if I didn't restrict myself to that line, we drew like a zone, like anywhere in that zone. Anywhere in this zone, would have been considered a buy zone. So I'm still, like I said, I'm still bullish in this overall area. I think I gave some price points for S&P yesterday. I mean, not yesterday, Sunday, where I would think that, this is the buy zone, but, within reason, price anywhere in this area, price should be buying up. Anything lower, there's a cause for concern, and price is probably pushing down back all the way to this gap. But we're not thinking that. We're just, giving ourselves the option that if we see this, this is the direction that we're going to be going with. You know what I'm saying? But like I said, this thing S&P is ranging as well. fact that we created a high point and we're still within this consolidation zone, I'm still comfortable with saying that this is a bull run. You just got to deal with the headache of, every time price pushes down and buys up, don't think that it's a Hail Mary. Think that, I just take my profit as I see fit. But again, like I told you, very common pattern, Morningstar pattern, and stronger than what we saw in US 30. But every time we've been seeing, and it's around how they've been both moving. This push down around opening bell. You know what I'm saying? So you're seeing, man, there's a lot of similarities when it comes to trading indices. Like they're not going to do the exact same thing. So that doesn't say that necessarily S&P is ready to buy up from here, or we're seeing signs that we like to see. We could see like a violation where price tries to dip low, but that's only probably to clear out these wicks right here. You know what I'm saying? But I'm still looking at it the same way. This is a better version of a Morningstar pattern, if you ask me. This always made me skeptical right here, but I think this is a better version of a Morningstar pattern. So NASDAQ, I'll be honest, I don't know if NASDAQ is building strong support right now. I think the NASDAQ maybe, which if the NASDAQ is coming down, S&P might be brought down with it. But within the NASDAQ, I know that it has its own market cycle where it decides to like when US 30 or S&P are buying up, NASDAQ is selling off for some reason, maybe to collect some low points. But if we just look at the structure, same thing. May 7th, Price created a funny looking candle. And here we have is our support structure. So again, this is new support being made, and you have to respect whenever indices create support. Trust that it is creating what you see. You know what I'm saying? So right here, again, we have a Morningstar pattern, another Morningstar pattern identified next to not a Morningstar pattern, but this is still a form of structure. And then when you turn it to a line chart, you can see that, oh, even though we're counting this as support because the wicks hit it, we can say that price is probably testing the high based off of how the structure closed. You know what I'm saying? Oh, it actually went lower based off of 33 isn't, that's a custom time frame. So, okay. When you look at it on a 30-minute time frame, we did meet support. Price did push support, and currently we're at the high. Doesn't look like that, and currently we're at the high. So I'm gonna still roll with that. Price has created support unless it shows me something different. Because again, if this was resistance, if we were selling this market, I inverted NASDAQ. If we were selling this market, obviously it's been building. Well, I inverted it because it needs to look like a sell if we're buying. If vice versa happens, like we're buying and then it looks like it's still buying. Like if this was look like it's still buying, then yeah, I would think that okay, we're definitely in the wrong direction and price is going to hit some lower points that I'm not expecting, which all may very well be true. You know what I'm saying? But like we've been pretty, on point with our analysis. And again, we can only go with what the market gives us. I don't think no trader around here is perfect. But anyway, let's just kind of look at the rundown, right? We created this momentum down here. We built was what was once resistance at this point until it became support. So this is old resistance. Like this isn't new resistance because I know we haven't inverted, but this is old resistance, like on a smaller time frame that so it is now support now because if we flipped it as support. And you can see price has been basically pushing up. You know what I'm saying? I don't want to confuse us, pushing up. And today was the second time we've touched this area, which we know price needs to do what? It needs to touch two price zones in order to validate that that is structure. Up here, we didn't validate that it was structure. So to me, this looks like a pullback. But right here, we validated that it's structure. We do have other points of contact that the market could try to target based off of what we know. But to me, this is like the leading move, and then this is the support that price needed to say, yeah, I'm ready to actually push back up. But that's all I got for you traders. So I'm still remaining bullish. And then, if the conditions change and the market pushes down a lot lower than I expected, then yeah, we'll have to readjust our analysis. And for me, I'll probably have to take a loss on one of my trades. But yeah, like I said, I'm still bullish. I'm not changing my direction until we get like something major would have to happen. You know what I'm saying? I know it may sound crazy, but it's like this is just how trading works. Something major in a negative way would have to happen for me to still believe that this market isn't going to continue to rally. But that's all I got, traders. I hope y'all have a successful trading. Well, one, I hope y'all have been having a successful trading week, but I hope y'all have a successful trading day with this information. I hope it served you well, but I will catch y'all on the next video with Digital Goats Academy, which will be our live trading on Thursday, YouTube. And my community knows that they'll see me Wednesday. So I'm Antoine Farrar, always signing off. Peace, traders.